To CommSec for a look at the markets. Tom Piotrowski, how are we going today, Tom?
Pete, we're going to get off to a flat start this morning. The market did quite well yesterday, so at the start of the trade at least we'll see a little bit of consolidation. The futures dipped just into negative territory a short time ago, reflecting what was a workmanlike effort from US markets, you might say. The gains weren't breathtaking. The leading indices laboured higher as they digested economic and corporate news. So at the end of the session we had the Dow Jones up by a third, the S&P was up by 0.25%, and we had the Nasdaq just in positive territory. So if you view it in the context of what's happened in the last couple of days, we actually had some quite good gains for the US market yesterday. So they've been able to at least capture that and move ahead slightly. So what we saw last night, Pete, in the US is real estate, consumer related stocks and financials do quite well. The most recent outcomes from the reporting season in the US, where banks are concerned, have been quite encouraging. So stocks have been able to build on that positive news. Netflix has just reported its numbers after the market closed. We've seen the shares dip quite significantly, down by around 4%. Whilst their earnings bettered expectations, there was a miss on the revenue side of things. So a bit of a mixed outcome. When you look at the last 6 months, though, that stock has rallied quite considerably. It's been up by around 40%, as much as that. So there's a lot of good news factored into the price, and perhaps just a little bit of consolidation in the aftermath. Yeah, European markets were a bit mixed, but it was the UK market that stood out with a better than expected reading on inflation. It hit a 15-month low last night, so we saw a very substantial drop in UK long and short-term bond yields. So long and short-term interest rates moving considerably lower, which contributed to the FTSE rising by 1.8%. An important day today, Pete, with the release of the June unemployment report. So the expectations around interest rates will all hinge on what we see with these numbers today.
All right, we'll be watching that one closely. Thank you, Tom.